Hey traders, happy Sunday. This is Christian Fromhertz with Tribeca Trade Group with your weekend video, market recap video, as well as option review from last week and technical review. And first thing first, I always start these videos with looking at the major indices and then drawing in a little bit closer to sectors and then individual names and where we saw the option activity last week. So first thing first, looking at the SPY ETF, the performance last week in the SPY ETF for S&P was almost up 1% last week. Qs were up about the same last week, and small caps were down a little bit. So we started off the week uh, in a holiday shortened week, and we started on Tuesday doing very well, nice gap up as international markets had basically a 2-day rally while we were off on vacation. So Tuesday, real nice performance move up. Wednesday, a little bit of digestion, and then a little bit of weakness came into the market on Thursday and Friday. But buyers returned into the market. Thursday looked like it was going to be one of those days where we were going to break down a little bit, but you look at the S&P and where it closed, and I think it was down about 10 basis points. Same thing on Friday when we came in the morning. We saw Europe down well over 1%, and it kind of looked like it was going to be not so fun of a day, but buyers came back in, especially at the end of the day. The MOC, market on close and balance, was about 2 million. So that's the second week in a row on a Friday that we've seen a lot of buying, which is pretty unusual. There was an article out by Zero Hedge that came out this weekend. They were quoting a broker who was talking about trying to find a reason for the 330 ramp into the close. And as usual, they were talking about ETFs and as ETFs being the cause of this. Was completely wrong. They were talking about index rebalancing is the reason for it. This is what I used to do for a number of years as an institutional trader back at Merrill Lynch. I could tell you that it's not index rebalancing. Index rebalancing happens quarterly, and it happens also semi-annually. So there has been no quarterly rebalance the last couple of weeks. So it is not index rebalancing. Also, there are one-off index rebalances when one name goes in and one name goes out, but that's not the reason for why we're seeing this buying going into the close. It's also not leverage ETFs. The leverage ETFs are not big enough to provide that, which when we saw that years back. So that's not the reason for it. It's a guess. I think they're grasping at straws. It is what it is. There's buying going in that's marked to the close. So there has been a lot of ETF buying, but it has nothing to do with index rebalancing. So if you read that by Zero Hedge, a lot of the times they try to put things out that are not exactly correct, but somebody basically grasping at straws. Anyway, I just wanted to mention that because it was getting a lot of attention in this weekend. So that's S&P. Let's just finish up with the S&P chart. And the one thing that I'll notice is it's still overbought here. So, I was secretly hoping for us to kind of burn off these overbought levels on the RSI, which was firmly, I think it was, yeah, it's been about 80 on the relative strength index, which indicates that it is overbought. So, as I've been saying in the trading room, keep an eye on this 5-period exponential moving average. The price action continues to remain above it. So you don't want to necessarily anticipate. You could see that the relative strength index is way overbought, but until the price action gets below the yellow line, then I would say that we've got maybe a little bit of a pullback coming, but it hasn't happened yet. So to try to anticipate this is, it's been overbought now for a couple weeks. If you look at the weekly chart, maybe it is providing a little bit of a clue here that it's also overbought here. So it doesn't always come right in once it's overbought, but eventually you do usually see a move back at least to the 20-period exponential moving average. So that's kind of what I would be aware of. And I'm going to talk a bit about sector rotation. Same thing with the Qs on the weekly chart, also now flashing overbought on the RSI. You go back to the daily instead of the weekly, and you can see that the price action again, it tried to get under the 5-period exponential moving average, and buyers came right back into it. So it is what it is until the price action remains above the 5-period. we're still in a nice uptrend, and you want to continue to ride the wave, but be a little bit cognizant or aware of these overbought levels. Just going over to small caps, a little bit different. They actually finished down on the week, down about a 0.5% last week. And the two levels to watch, I would say I'm neutral on the small caps until we either have a break below, which support, you could write these levels down. Support is 136.73, or call it 136.70. That's the top of the monthly value area. And then I would watch the high, which was reached back on, what is that, 221 of that level's 140.32. And I think until we either break the level downside or break to the upside, you know, you really have to be, I think, neutral small caps here, which is what I am. But I am closely watching small caps because sometimes they do provide a clue into the overall direction of the market before you see it in SPY. Just looking at those two charts in the Qs or SPY, you could see that they're different. You know, the Qs had a nice run up and a pause and then a leg higher. IWM never has made that second leg higher. So that's kind of what I'm looking for, is for this break of 140.32. Even if you zoom out, you can kind of see nice move up, a lot of sideways. We try to go, and not ready to go yet to that upside yet. But so 140.32 is basically what I'm watching there. Okay, so let's talk a little bit more about what was the theme of last week. Really the defensives. If you look at the performers from last week, you could see in the U.S. it was utilities, solar names, which we're going to get to the solar chart in a second, but REITs up 2%, consumer staples up 2%, healthcare also outperforming. And then you saw a lot of the higher beta names really kind of cool off a bit. Metals and mining down over 6%. So there was, I believe, a mini rotation that happened last week. These areas really cooled off. Some of the steel names, which have been hot, hot, hot. We also see energy continue to be on the underperformer list. And I'm going to look at XLE in a second, but continues to break down a bit. Still above the 200-day moving average, but broke down a bit. Also, the banks cooled a little bit, down close to 1%. So going back to that theme, if you want to look to see how these defensives or minimum volatility ETFs are moving as a group, you can look at the USMV. That is the minimum volatility ETF. So it's basically a basket of, you could actually go, I'll go bring this up on Bloomberg so you can see exactly what this looks like. And you can see the holdings of this. It's a lot of just basically defensive groups. You have a lot of utilities in here. You have a lot of pharma names. You've got a lot of consumer staples. You could see Pepsi is in here. Verizon is in here as well. And this performance last week, it has been pretty striking. If you go back to that chart that I was just showing, nice break here, nice break higher here. This ETF got a lot of attention about a year and a half ago. There was just a ton of investment that went into it, and then we kind of forgot about this group after the election, as it was more of your risk-on securities, your financials, your industrials, your materials that have really made the leg up. This is the investment, just so you could see exactly what I'm talking about here. This is the investment in this US, the minimum volatility ETF, really in the beginning of 2016, just a huge amount of investment, and then it kind of trailed off a little bit. So I also have just another way to look at high beta versus low beta, and you could look at this chart together, and you could see that it's really made a nice run from the middle of 2016, high beta outperforming low beta, but you can kind of see the last 2 weeks what's been happening here. You could see the lower beta, the more defensive sectors have been outperforming higher beta. So could be something to watch going forward. You know, as I talked about, you know, the major indices being overbought, it doesn't necessarily mean you have to be, while the major indices are overbought, it doesn't mean you have to be out of the market. You just want to pay attention to what sectors are seeing the buying and what sectors are seeing the selling. So last 2 weeks, we've seen a lot of buying in that utilities, healthcare, and consumer staples area. Also REITs. Take a look at the REIT ETF. This was something that I said to keep an eye on in last week's video. Now over the 200-day moving average. So what I will be watching next week is for single name flows in some of the REITs. I am long one of them. I'm still long Weyerhaeuser, which is a REIT. Was able to hit one target in this one, but it's been kind of coming in a little bit here. So I would be watching for call buying next week in REITs, also utilities. Consumer staples, we've already seen it the last couple of weeks. We've seen a lot of names like, started with Unilever, then it was Colgate CL, Kellogg, and a few other names in that group as well. So consumer staples, if we go to the my chart in Thinkorswim, I think these have already basically made the move. You got that purple line up there, which is a VPOC. So I would be wary of this. This was in the newsletter last week when consumer staples were back here. So I think they've made the move here. I would still be watching for aggressive call activity, but I'm more focused right now on the REITs and utilities and watching for single name call buying in that particular group. XLV, this was I detailed this towards the end of last week in one of the end of day videos, but XLV healthcare has been on a really nice run as well the last 2 weeks. Notice that we've risen up to this purple line, virgin point of control. So it could be these often act as magnets, and we could see a little bit of price digestion now. But interesting to see. Pharma PPH is another one to watch. It's right at the 200-day moving average. But it's interesting to look at the performance between the healthcare ETF and biotech, doing a little bit different things. We talked about biotech. Here's a good example of taking out a VPOC, virgin point of control, and then turning back the other way. So we'll see if that happens in the healthcare ETF. Jumping back into the newsletter. So that's the main kind of theme that I wanted to touch upon, is that, while the major indices are overbought, keep an eye out for those sector rotations, as I think just the money is going to stay in equities but continue to kind of move around from sector to sector. So we already did the index review. We talked about those. Sector review, I've already made, we already looked at the REIT ETF last week. I mentioned that it was just underneath the 200-day moving average. So it's now one of the stronger, now in the group of strong sectors. Other than that, many of the leaders, financials, tech, materials, they kind of moved down. They had kind of inside weeks, I would call them. XLF was plus, 20 basis points. So was XLI. XLB was flat for the week. So a little bit of digestion there. They lost a little bit of their upside momentum, but really nothing much has changed there. The other notable change, I would say, which I mentioned a couple minutes ago, was let's see, where do we want to look at XLE? We can look at it here. We're right touching the 200-day moving average, and I'm not sure if, considering that we've gone from about $78 back towards the end of the year in the XLE energy ETF to now 71. And have broken below the 50, broken below the 100-day moving average, and am now at the 200-day moving average. I'm wondering if this is giving a signal for us for oil, which continues to be right around the $54, $55 range. It remains to, we kind of just have to wait for oil to see whether it's going to break to the upside or break to the downside. It hasn't revealed itself yet. The one thing that we've been talking about over and over in the trading room is every time it gets to be 55, sometimes we come in the morning, we see a nice green candle, but yet it fades for the rest of the day. So we've continued to see that once we get to that 50, 55, high 54 range in oil, it just kind of simmers off and cools off. So while this has been going sideways, it's interesting watching the energy names. You could look at as well XOP doing the same exact thing, continue to grind down here. So watch the 200-day moving average next week. See if we either bounce here or if we break below. That's that white line on the chart. Let's talk about next fund flows. There's some kind of couple interesting, some notable trends that are happening here. For the third week in a row, strong equity inflows. That's 7.3 billion. The prior week was 10.7. The week before that, I think, was $8 billion. So 3 straight weeks of strong equity inflows. Fixed income ETFs also saw a little bit of inflows, 2.5. Commodities were quiet. Gold was basically flat for the week. 2 weeks ago, we saw big inflows into gold, but it's been quiet the last 2 weeks. However, what are seeing inflows, which is gold related, is the materials, and specifically the gold miners. Both GDX and GDXJ continue to see inflows. So last week it was GDX saw $364 million of inflows. GDXJ, the junior gold miners, saw $277 million of inflows as well. So those continue to see inflows. It was kind of interesting because they broke down a little bit late on Friday with gold really not moving down. But watch that 200-day moving average. It looks like GDXJ just closed back beneath it. So this is one you want to watch for next week to see if this is going to, it looks like it already did break below the 200-day moving average on Friday, also touched the 20 period. So keep in mind, a break above and a retest. If it doesn't reclaim this 200-day moving average on Friday, I would say if you're long, be a little bit careful. Even though they're still seeing buying going on here, I think you have to respect that 200-day moving average. Next, what were the other sectors that saw inflows last week? We already talked about defensives, but so REITs, consumer staples, utilities, also inflows. So kind of confirming what you're seeing in the charts is there's money being put to work into those defensive groups. In terms of and just to kind of finish out the U.S. sectors, industrials and consumer discretionary, big outflow in industrials last week. I think they actually profiled a bearish trade on options action on CNBC on Friday for industrials, but $430 million coming out of the industrials ETF last week. To switch over to international, it's been the same theme last few weeks. A lot of inflows going into emerging markets. This is something I profiled quite a bit in last week's video on how much emerging markets have been seeing inflows quite a bit, another $903 million. And a lot of this is the IEMG ETF. So now it has moved back above, this was obviously around the election time, big sell-off in emerging markets, but just quietly made that move above the 200-day moving average and hasn't really looked back since. So a little bit of a move down here. I wanted to talk a little bit about Brazil because that's also been seeing inflows. Same thing, just as emerging markets, those big emerging market ETFs like EEM and IEMG have been seeing the inflows. So has EWZ, Brazil posting the third week of strong inflows, 275 million. And take a look at the chart here in EWZ. It same thing, sold off a little bit after the U.S. election, but has been moving up. So right where it is now is retesting this breakout zone. I'm going to let this kind of work its way out for the next couple days, but if it manages to hold the 20-period exponential moving average, which is the blue line, and starts to curl back up, I'm going to look to establish a long swing trade in the Brazil ETF. If it breaks below the 20 in the beginning of the day, hands off. But I want to see this kind of hold this line and maybe get back above the opening print here, this top of this candle on Friday. That'll be my confirmation that the uptrend is intact in EWZ. So I'm watching that very closely in the beginning of next week. What else? We continue to see inflows into developed markets. So your Europe and Japan, international developed markets like names like EFA, $434 million of inflows. VEA, which is very similar, just this one is managed by Vanguard. This one is managed by iShares. Also saw $191 million of inflows. So this has been pretty consistent with developed market ETFs. And you can look at this EFA chart, which again is international developed. All it really is basically Japan and Europe. EFA is just kind of a fancy way to call it. But you look at the 2-year chart, I think there's a lot of upside here. If we maintain, we're right at this 60 level. If we maintain the 60 level, I think there could be a lot of upside here as the price action is now above the 50, 100, and 200-day moving average. So I think Europe and Japan still look pretty interesting here. And you could use that 50-day moving average as your stop if you're long, or you could put a little bit of a tighter stop in here, right around $60, which we're right above there. Other than that, the last point I'll make for the ETF fund flows, FXE, this is the Euro ETF. I'm going to talk a little bit more about this. Let's go right into the chart section of our newsletter. I'm going to skip solar for a minute, but big trade last week in options. They went out to June 107 calls. This was a $2 million trade in the euro. Also, and I like it when ETF fund flows confirm what's going on in options as well. There was $138 million of inflows last week in the Euro ETF. So you kind of look at the calendar and say, what are they thinking here in June? As the chart, to me, you look at that chart, as I said here, it looks hideous or horrendous. It just, it's in a downtrend. It's below the 200-day moving average. Not really attractive other than a counter trend trade. But you have to think about what's coming up here in Europe. And we're going to have the April 23rd is when the French election is. And I think the final one is May 7th. So this trade, somebody's looking for, I'm guessing, I'm speculating here, but I would think if Le Pen loses, you won't have a Frexit or a France exit of the euro, and the euro should get stronger. So that, I think that would be, if you have that point of view, that's going to take place. That could be a trade for you to take a look at of that FXE ETF. But again, very much in a downtrend. I'm going to jump in. So that's the end of the fund flow section. What got a lot of attention last week was solar. Solar, depending if you div adjust this or not. If you don't dividend adjust this, you could see that the solar ETF TAN is still below the 200-day moving average. Keep an eye on some of these names. First Solar had earnings which kind of fell for a day, and then buyers stepped back in. But take a look. Keep an eye on these names that are in the ETF. First Solar, CSIQ, SPWR, JKS. These two names in particular have been seeing a little bit of call buying, especially this one. CSIQ is one of the only ones that is firmly above the 200-day moving average. I think it's worth a shot here, and you've got your defined stop of that 200-day moving average. So I like CSIQ. I think for a small, maybe taking a small trade in this particular one, and I'll probably do this in cash. So I don't have a position now, but I wanted to see if it maintains the 200-day moving average, especially with those First Solar earnings last week. So I will most likely be establishing a position in CSIQ with a stop of the 200-day moving average. We talked about FXE. Also notable last week, and I like this one a lot, and I did start a position in this one. This is silver. Notice what silver has been doing here the last couple weeks. And it's interesting because I'd say about a month and a half ago, we saw a lot of SLV buying in options going out to, I believe, June, and I believe a little bit further out in the fall. And then it's been pretty quiet for the last month in SLV, but you can kind of see that it's been trending up, and it reclaimed the 200-day moving average. So we saw a nice October call buyer. They went in the money on these. This was a $3.2 million trade. So long dated trade. Out in silver, and they went in the money. I did this a little bit different. Maybe they went in the money because, when you look at the price of silver, where this could possibly get to before there's any resistance is about 18.5. So maybe they went in the money because they want a little bit of a higher sensitive, higher beta move by going in the money versus out of the money. So again, big trade, $3.2 million. I did get long SLV as well. We already talked about EWZ. I profiled that one as well. Brazil. Single names. Well, the first one that I have here is ASHR. This is not a single name. This is the China. This is the Shanghai ETF. We've seen a couple different interesting orders in this one. First thing that we saw was call buying out in July, the 26th and the 27th. This was back on 216 that we saw a little bit of call buying. And then we saw this nice, which I put this trade on Friday, April 26th, April 27 call spread. So they paid about 24 cents for this. The most that they can earn is the width of the strikes, which is a dollar minus the premium that they paid, 24 cents. So about 76 cents is what they could possibly earn. I got into this trade for 21 cents. I paid a little bit less than what they paid. 26, 27, the Shanghai has really moved sideways for the last year. So 26 to 27, I think is doable going out to April. So I took that trade for 21 cents. With the most I can make on that is 79 cents. So I like this trade. Okay, so single names that we've seen repeat call activity, and I'm not going to go over the exact contracts. I'm kind of going to go over this a little bit quickly because this is something that we go over in the Tribeca Trade Group room on a daily basis in detail. But Deere has seen some nice repetitive call buying in the last couple of weeks. Dollar Tree, which reports this week, Dollar Tree we've seen a couple times now. Call buying going out to May, a little call buying, both the 80, yeah, it looks like 82 and a half calls. They've hit a couple times there. Also a little bit of the April calls. So, the summary of this week's option activity is a little bit different than previous charts that I've gone over in the fact that a lot of these are kind of counter trend trades. Dollar Tree's underneath the 200-day moving average. So we've been seeing a little bit of dip buying, just like in Macy's. Macy's, they've come in a couple times and bought calls. Again, counter trend trade, it's underneath the 100 and the 200-day moving average, but I have it on here because they continue to buy Macy's calls. DuPont a little bit different. This one is a nice upward trend, and they've come in a couple times over the last few weeks in DuPont as well, possibly with some speculation that the DuPont Dow merger is going to be approved. Whiting, this is the only energy name that I've got on here. Whiting, we saw on Friday, call buyers return to this name, and we've seen call buying in this name kind of throughout 2017, I would say so far. Let's see if I can find that on this one. Should be in here someplace. Yeah, these were the April 13s that traded. A lot of dip buying, I would say, after earnings. HPE, we saw this as well on Thursday after LB brands tanked on earnings. We saw a call buyer come in there as well. That trades up here. That worked out really nice on Friday. L Brands was up, I think, about 3 or 4%, and that was a trade that we established in the trading room. And I got out of that trade. I'm completely out of that. So counter trend trades, I will play sometimes, but I will be out of them rather quickly if there happens to be a nice bounce. Foot Locker, nice earnings on Friday, and there was a follow-up call buyer going out to. August 80 calls. So if this name kind of comes in a little bit or digests some of the price action, because it was a huge gap up on earnings, could be a nice name to get long as they had a really nice earnings report. Qualcomm, another name that's in a downtrend below the 50, the 100, the 200-day moving average, but we saw call buying on Tuesday and we saw call buying on Friday in this one. Alcoa, we saw a nice longer dated play. Notice it's right at the 50-day moving average. If you're looking to play this name, if it holds the 50-day moving average, perfect. If not, if it breaks, your next stop is the 100-day. So if it does break the 100, if it breaks the purple line, the 50-day moving average, I would be out of that name. QVCA, another name that reports earnings next week. A couple big option trades in this one, so maybe they're expecting a big move on earnings in Liberty Interactive. And then I've got Bob on here. Not any real huge call buying, but just repeat call buying over the last couple weeks. So I wanted to put this in the report. This is the earnings gap, and it's been digesting. It's had a couple real nice days that we've day traded this in the room, but I'm actually looking at establishing a swing trade in this one. Maybe it tests going for the possible look to the 110, which is the previous high. Nike, another one that, after Foot Locker had those strong earnings on Friday, I think you have to look a little bit towards Nike, and we've been seeing a lot of call buying. We saw call buying a couple times last week before that Foot Locker report. So keep an eye on this name. It is now above that yellow line, the 200-day moving average. So if you want to be long Nike, I would say watch that 200-day moving average. And that's it for the newsletter. I could go over just quickly the FANG stocks. Apple had a small pullback, just like with the major indices, but reclaimed the 5-period exponential moving average. Facebook continues to see opportunities to day trade this one. It is sitting above the value area, which I like, 133.14. I would maybe watch this candle here. The price is very close here. So if we get a move or a nice close above the opening print here in this candle and the closing one here, I would say I would be long Facebook once it gets above that level. Google, I actually got out of my swing trade last week in Google. As it's, nothing really has changed here technically, as long as it remains above 840.70 going into March. The trend is your friend. If it breaks below, that would be a change. Amazon, I think, also looks interesting here. It did have a little bit. It sank a little bit Wednesday, Thursday, and Friday. But watch, it did stay above the value area here. So Amazon, I would watch 839. Call it 840 to the downside, and we'll see if it can get back to these levels here. But I would watch that support. Netflix, which I think to me looks most interesting. I would watch for a break above the value area. So easy level to watch for this one is, call it 143.60. And if we can get back above 143.60, I would be a buyer of Netflix. Last one I'll look at is Nvidia, and I've got a nice level for you to watch in this one. A lot of weakness, a double downgrade last week, but I would watch the bottom of value. It did reclaim it. Also on the weekly chart, which is I think most revealing, what we did here on Friday is we almost got to the bottom, or excuse me, this is the top of the value area, 93.47. That area. If we do breach it, I would not want to be long this name, but I think while it's above it here, you can give it a shot. If you go back and look at the last couple of weeks, this was pretty revealing. This particular candle was a shooting star candle, and since then, especially the double downgrade. But this is a name that's worked great buying the dips before. So keep an eye on this name as long as it remains above 93.32. That's the top of the yearly value area. I think it's worth giving it a shot up here. All right, so that's this weekend's video. Thank you for watching. We are still running the promotion, half off the first month of the Tribeca Trade Group Trading Room, where you can get our newsletter as well as all the other services that we provide. The coupon code is TTG. Visit us at tribecatradegroup.com. Thank you very much for watching the video and hope to see you in the trading room. Thanks.